With elections out of the way, industry is expecting some key changes as well as some long-awaited reforms on the tax front. Topping that list is a streamlining and simplification of the capital gains tax regime, an architecture that currently involves multiple tax rates, varying holding periods, and different indexation rules across asset classes and investment instruments. Now, while the stock market is hoping that there will be no change in the 10% long-term capital gains tax on listed shares and equity mutual funds, there is an ask that the FM simplifies the overall capital gains structure into 2 or 3 clear slabs. The second most awaited expectation is relief to the common taxpayer in the form of an increase in the basic income tax exemption threshold in both the new as well as the old income tax regimes to 5 lakh rupees. While the new concessional tax regime has been given sweeteners like lower rates and 50,000 rupees in standard deduction, the basic exemption limit under the old tax regime has remained at 2.5 lakhs for the last 10 years. Taxpayers will also, of course, welcome any increase in the 1.5 lakh rupee deduction limit under Section 80C or the 50,000 rupee deduction offered on medical insurance under Section 80D. Now, with the rise in property prices, the great Indian middle class is also hoping that the deduction offered on home loan interest under Section 24 is increased from 2 lakh to make home ownership easier. Coming to industry, the foremost demand is that the government extends the concessional tax rate of 15% for new manufacturing companies by another 5 years. This relief had expired on the 31st of March 2024 with no mention of an extension in the interim budget. Then there is the request to exempt listed companies from the 20% buyback tax if the buyback is via the open market stock exchange route. Startups are hoping for relief from angel tax, which is a tax levied on funding raised by a company at a price above its fair market value. Now, while the tax department has excluded several entities like sovereign wealth funds and multilateral funding institutions from the purview of angel tax, the definition of fair market value remains a point of dispute between tax authorities and startups in many cases. Finally, India Inc. hopes that the FM will use tax policy to further incentivize R&D in sectors like green energy and AI, and will also extend the concessional tax of 10%, which is levied on royalty earned by patent holders, to the revenue earned from the sale of patented products which are manufactured in India. Last but not the least, tax experts in not just India but around the world are waiting to see what stance India takes on the big global tax framework, the OECD BEPS project, which is Base Erosion Profit Shifting. This framework is looking to implement a minimum tax of 15% on all MNCs across the world to ensure that there is no tax avoidance and leakages. India is expected to clarify its view on the matter and take legislative steps on implementation. So, from the common taxpayer to retail investors to Indian and foreign CXOs, all eyes are fixed on Madam Finance Minister as she begins her address in Parliament in the next few hours.